All right, happy Friday, everybody. Thanks again for following along with this journey. Today, we're going to switch it up a little bit. We're going to go through the portfolio review first. Then there's a couple other things I want to talk about. I want to give an update on how my spreadsheet's looking. I've made some updates. For me, it helps a lot and how I track this stuff, keeps me on task. And then also, I want to talk a little bit about risk management. And we'll try and keep the video well under 10 minutes. And if you aren't subscribed and you want to follow along with my Layoff to Options investor journey, go ahead and subscribe. And if you get any value out of this video, hit that like button and I'd greatly appreciate it. All right, so just in summary of this week, we had a pretty good week. And I'm recording this the morning of Friday before the market opens. So the numbers that you're going to see is actually representative of a little bit of a pullback yesterday, which is okay because that's part of it. And even looking at the pre-market today, it looks like it could go either way. About an hour ago, it was down pretty substantially, and now it looks like it's about neutral. So who knows what today's brings, but I'm going to go through a little bit of that. Looks like we're going to have some assignments today on PSIX, and we'll walk through that. All right, so taking a look at the portfolio, it looks like we are up around $5,000, and that's inclusive of now a total of $8,500 in draws. I made both of my draws for October, just treating it like a paycheck, basically around the 1st and the 15th. So the fact that we are even inclusive of yesterday, the account is down around $2,000 from yesterday's activity, but we're still up overall with this journey around $5,000. So the way I do this math is I'm adding what our account balance started at and then all the capital infusions that I've made along the way. So again, the severance, pulling over some money from other places, and our journey to eventually get to around $300,000 in capital in total to trade on. So had we not done any actions at all, we'd be sitting at around $232,000, which includes October draws. But with all the actions we've been taking, the options trading, the account is actually sitting at $237,000. Remember, our goal right now is to withdraw from this account, but to outrun the withdrawals. So far, mission accomplished. So a couple things that we did this week, we took some more positions just in our long-term investments account in ETHA. It's been down a little bit, so just increasing that. I'm still very bullish on ETH, and that index fund's really good. In the options, we've executed a few more cash secured puts, and we executed what I'm dubbing as a swing covered call. I'm sure this is not a real thing, but that's just what I'm calling it, and I'll explain what that is when we go through the charts. And the highlights of this week are, if you don't include the draw, I've actually grown this account by about $13,000. So the way I'm doing that math is, in total, I'm up around $5,000 from above. But if I include that drawback in there, that's actually around $13,000. So I'm very happy with this. So happy that it actually
kind of makes me feel like river dancing.
No, but in all seriousness, this is actually really good, and we are hitting all of our goals. Right now, where we're at in October is we are around $929 off of where we want it to be. You can see I added a line in here for the total capital that I plan to have at work and what I put at work. Now you see $142,000 in here. It's a little bit of a misnomer. The extra $10,000 or so that I put in there was this week and late last week. And that stuff doesn't actually clear for around 7 or 8 days before you can trade on it when it's coming from a relatively unknown bank account, which I've recently added. So I technically don't have these to trade on, which is why I left my target gain at 3% of the original targeted capital, $130,000. So how we're performing to that is in our cash secured puts, just premiums only. We've realized around $2,700, and in the covered calls, the premiums we've realized are around $207. Which puts me at about $929 left to go for October. And what I'm really learning is, from a cash secured put premium perspective, October is pretty much a wash, because I really like to target between 15 to 30 days out for cash secured put premiums. They're a little better, and it gives you a little bit more time to plan for that stock movement. And so I don't actually consider a realization of the premium until the day that the contract expires. So as you can see, I'm already starting to beef up November with new cash secured puts that are going to expire there. So from a cash secured put perspective, October is basically a wash. But from a covered call perspective, once you get that premium, you're not going to close the covered call earlier. We'll get into the reasons for that in another video. So I'm just collecting those premiums, and I just apply them right towards the balance. And what I'll show you today is, I do think we're going to be able to hit this October target through some new covered calls that we are going to execute on Monday of next week. Another thing I'm really starting to plan for is what does a 3 to 6 month market pullback look like? In that scenario, we'd probably get assigned everything we have. Again, not in the business of taking a loss. We would just have to sit on those stocks until they recover. So what would that look like and how do I plan for that? But right now, let's just go ahead and jump into the charts and look at all of our positions. So one thing I added on the charts is I have my watch list, and this is my current position. So I do adjust this based upon what options are actually open. So it's a very quick go through. So you can see in SoFi, we're in a pretty good spot. I have a whole bunch of stuff at the $25 strike price. I got one expiring today, and then I got a couple expiring on the 31st, and then I got a couple. I got another one expiring in November. So all in all, on SoFi, looking pretty good. It's just, again, if you zoom in a little bit, it's just not getting down to this range. So these will all expire. And who knows, this could drop substantially today when the market opens. I'm not sure. And who knows, this could drop a couple dollars today, and I end up getting assigned these at 25, which I would be okay with because the high was at 1.30. And then we'd go from there. So I think we're in a pretty good position on SoFi. Looking at SMR. SMR, this is that one that we talked about last week. This is a good one. So this one actually blew way above my covered call number. So what this basically means is, remember, we got to sign around this $41 rate. I set a 10% gain covered call of around $45, and it's blown through that. But what that means is I'm going to have to sell these at $45. Now, this doesn't expire until next Friday. So this could either go back down and continue going up. It could go up to 65 or 100, and somebody's going to get a great deal because I still have to sell these for 45. But the way I'm looking at this is I'll still have got my 10% gain on this appreciation on the stocks plus my premium, and the round trip on that's about 14-15%. I am completely fine with that, even if somebody gets a phenomenal deal. So in pretty good shape on SMR, and probably going to start looking to do some more cash secured puts on this one. BMNR. Again, this one is another one. Just the way that this stock is trending, who knows what it's going to do? It could potentially go off of this Bollinger Band and bounce and go back up, but we got some time. So we're just kind of watching this one. PSIX, this is where all my big action is. So what I mean by that is we do have a covered call that is going to expire today. And I was hoping that PSX would hit $100 by today. That would give me about a 10% return. And with the premium, it would have been around 12%. But I don't think these shares are going to get sold. And so that contract will just expire. But in addition to that, you can tell it's a pretty good chance, depending on what happens in the market today, most likely going to get assigned at least one more at 95. Because I don't think it's going to get above that today, but it could. And then potentially get assigned another lot. So that would put me at 3 lots, which is 300 shares of PSIX. And I'm actually pretty happy about that because now I'm just going to start cover calling my way out of those. And really quickly, if we look at the premiums on this, the best way to look at this is on this side is the covered call side. So if let's say the stock is trading at, go back to the chart real quick, and it's at $95 on Monday. And if I do, so I would say, hey, I want to go out, but this time I'll probably raise it about 50. I'll probably go to about 15%. So I say, hey, I'm okay. That was 110. So if I say I'm going to set a covered call strike price at 110, and I'm going to sell that option. So if I go out to November 21st, which is the next available option chain, I go look at the 110 strike price. I'm going to get a $360 premium on that. What I'll probably do is go from one at 105, get a 530. Because remember, I'm going to have 3 lots of this. So I'm probably going to do one at 105, one at 10, and one at 315. So that's 500, 300, 350. That's why I was saying I feel like I'm going to meet my October goal, because remember, we're about $900 off, and this is going to be over $1,000 right here. So I think we're just barely going to hit our October number in premiums, and just set these covered calls for next month. And if they expire, I'll just keep rolling these premiums, these covered call premiums over and over and over. So taking a look at VST, good shape. It's a ways off of my strike price there. AMSC. We are pretty far out on this, back out to the middle of November. This thing just seems to be going kind of up and down. So nothing to do here other than just watch it. Palantir, I think we're doing okay on this one. You can see that the Bollinger Band is closing because there's not a lot of variation right now in the stock. And so the Bollinger Band is squeezing a little bit. So at some point it's going to break out either above or below this Bollinger Band, but we've got some time on this one all the way out again to mid-November. So just watching this one. Rocket, this is the one that I did a what I'm calling a swing covered call trade on. So on Friday of last week, I basically I was watching this chart, and these dojis were indecision dojis, and potentially we're looking to bounce this stock, and it kind of did that, right? So I just went ahead and bought 100 shares of this, and then I turned around and did a covered call for at 16.50, and then I did a covered call for 19 bucks. So my thought was that, hey, this stock is about to bounce and then go back up. So what I did is I just bought 100 shares, and this is literally just a swing trade. I bought it what I believe is a low, and I basically put a sell order at a percentage of gain that I'm willing to do, and I got a premium for that. So we're just going to see how this one plays out, and this is what I'm kind of dubbing as a swing trade covered call, because I did not do a cash secured put to enter into this trade. Served from a cash secured put perspective, this one's looking great. These are likely not to get a sign. This stock just continues to break out, but yesterday had a big pullback, and we'll see what it does going forward. But in my positions, we're just watching, and they look pretty good. And Amazon in my leap, remember, we need this to go continue to climb and climb and climb. We need this to go to the $230 range, all the way back to these recent highs. And then my leap contract will start to go up in value, and then we'll probably look to liquidate that and take our percentage of gains on that. And then finally, WDC. This is one that I entered into recently, and the reason I did that is looking at the chart. Again, this is a uptrending stock, and when I zoom in, it is having a pretty good pullback. So that's when you want to do a cash secured put, and I did one, and it started to bounce back up. So this one's actually in really good shape, and we're just going to continue to watch this one. And that's going to be it for now. I wanted to actually get into risk management and some other things, but I wanted to keep this video at a respectable time, somewhere around 10 minutes or even below, and we've hit that. So I'm going to just put out a second video on that in the next couple days in between the next big updates. So that's it. Have a great weekend. Thanks for sticking around. And if you hung around this long, I really do appreciate it. You want to keep following this journey, go ahead and subscribe. See my son in the background, and I'll see you in the next video. You guys have a great weekend.